So in this video, I'm going to be doing a trade recap of the trades that I took on Tesla from Friday, April 1st. I'm also going to go over some other names and some setups that I think that I missed. Those names are Facebook, Nvidia, Baidu, and Microsoft. And then at the very end, I'm going to be going over my March 2021 P&L and show the broker statement. But before I get into all that, I just want to highlight, if you look at the screen right here, this is SPY. It made a new all-time high. This market just refuses to go lower. Maybe one day there'll be the big crash, but for now, it doesn't look like it. And also looking at the Qs, been kind of hanging around this consolidation, chopping around for a little bit. Finally broke out of it, above the short-term moving averages, above the 50 SMA on the daily. And I have no idea what it's going to do, but this looks like it at least wants to make its way back to all-time highs. So what would be fantastic, and I prefer, is that even if there is a little bit of selling that chops around for a short period of time, that eventually both can catch some momentum, maybe go back into a trend, and then the market becomes a little less choppy. And for me, that's the best trading. So that's what I would like to see happen, but we all know that whatever you want to happen in the market usually doesn't. So that's where instead of having a bias, I just try to focus on the technicals. But I know in very strong markets, that's where scalping momentum can be really good. And now just to touch on the week. So it was a short week and I had an all right week. It wasn't anything crazy. I know with the current environment, the way that it's been, I've kind of pulled back my expectations a little bit. And rather than trying to constantly have big days, just really focus on consistency. So I did put a tweet out there saying, if I can average anywhere from 300 to 400 a day, then that's great. Obviously, I want more, but I know that the environment is not the easiest to trade. So if I can have, a win off the open or a couple trades off the open that go my way pretty quickly, I'm much better just taking a step back, calling it a day after that, than continuing to trade, because I'm very guilty of getting chopped up. And the one thing that I've done that I've talked about before is just scaling back the size, trading 100 shares at a time. And if I get that quick move on Tesla, just take it. And it only takes a couple of those to really add up. So I was able to apply those rules, be pretty consistent, and stay out of trouble this week. So I pretty much just traded Tesla all week, and same goes with Friday. And I want to go over some of the other names that I think had okay setups that I just missed out on. So starting with Facebook, which has been showing a lot of relative strength. It's trading above the 9 EMA. It had the gap up on Friday, and it was trading right near this prior pivot high, which was 299.71. So just coming in the morning, trying to look at some basic levels. That was obviously a major level, knowing that it is also trading close to all-time high, 304.67. So I had that 299.09 pre-market high marked. So those were the levels that I was looking at. Now just to see what this did off the open, because I did not trade this. The very first 1 minute candle had a nice push, so it got through pre-market high. It got right towards that prior pivot high, 299.71. And then the next candle was a little bit of an indecision candle. And then here's where I probably could have considered taking the trade, and I didn't. And the reason that I didn't is because the pattern was really quick off the open. And in the current market, I feel like it's been kind of risky to take quick patterns. This happened to work, but if I were to take 10 of those trades, I feel like a good chunk of those would be losers. So I kind of just patiently waited, and I didn't want to take anything too quick off the open, especially being on a Friday. But just looking back at this, had a very nice push, showed a very strong 1 minute candle, a little bit of an indecision candle in that next one. And then the high of that candle was 299.97. Also knowing that the whole number 300 was above. It's a strong stock, very nice daily chart. And then when it took out the high of that candle, somewhat of a flag pattern, because that next candle opens up right around 299.50. But to be honest, not that clean. But just going back and trying to see how I could have traded it. Once it broke this candle high, 299.97, trying to anticipate the 300 break is what I would do. And then go quick or just try my best to get out of it. It does break 300 and has a very nice momentum move. Goes about 2 points in 2 minutes. So even though it's not a huge move, there is definitely a lot of money to be made on a setup like that. So now looking at Nvidia, it did have numerous green candles in a row, but it did reclaim the 9 EMA. So kind of showing a possible trend change. Had the gap up on Friday, got above the 50 SMA, cleared prior day's high, which also kind of aligned with this prior pivot high. So just knowing that 539, 540 were major technical levels, and it possibly had a chance to run. So I have the prior day's high marked 538.82. It was trading above that. And then pre-market high marked 542.95. And what did it do off the open? So it had a very nice pullback, which I like. I'm a big fan when things pull back off the open. They then show some strength, reclaim the 9 EMA, reclaim VWAP, take out high a day, and a lot of times there can be some follow through there. So on this fifth 1 minute candle, showed a lot of strength, got back above the moving average, back above VWAP, and then came to high a day. And I think the reason why I didn't take this is because it was numerous green candles in a row. I didn't want to chase it, but the overall market was strong. So just looking back at this, I could have just taken small size. 100 shares on the break of 544, go quick or get out, and then the moment it breaks, really starts to speed up and goes a couple points in a few minutes. So even though it wasn't a perfect setup in my eyes because it wasn't very tight, it still was pretty good. It took out that high and had some really nice follow through. Okay, now going over Baidu. So this is much less about an opportunity that I missed and more just an example going to show that the short-term moving averages can really provide areas of support or resistance. And this is why I like to always know where they are in the daily chart. So Baidu had a pretty big sell-off, held the 200 SMA, had a bit of a bounce back, couple days of consolidation. On Friday, it was gapping above prior day's high, so right around 222.11. And then I also, just looking at this, had pre-market high marked 224.78, but knowing that it was very close to the 9 EMA on the daily, right around 226. And off the open, Baidu had a little bit of a pullback, which actually looked pretty good, and then a nice opening range break right around 224. And this just goes to show an example why I avoided Facebook, because a lot of times these quick patterns right now in the current environment have not been the cleanest. And here's a good example. So this breaks 224. It did have a very quick move, but instantly rejects off pre-market high and pulls back. So that's why I didn't touch Facebook, because I've just seen this happen a lot. But then here's where there was a decent setup. The reason I didn't take it is because it was close to the 9 EMA. So I was just trying to be safe. But looking back, there was a scalpable opportunity there. So even though this was a little choppy, had the nice push, got back above the 9 EMA, was kind of riding it, and then here is a nice flag pattern. So right around 225.60, 225.70, breaks the flag and does have a nice move. So there was about a point to get, had to be pretty quick, but you all know me. When I take scalps, I'm usually out pretty fast. But here's the example that's the most important to me. Once again, the short-term moving averages can be big areas of resistance or support. So this pushes right into the area of where the 9 EMA is and gets rejected. And it gets rejected pretty hard. So can't hold above it and then sells off the rest of the day. Nothing is 100%, and it's not always going to sell off every single time it gets there or bounce off of it. But I always like to know where they are, so that way I'm not chasing the high up here, just knowing that it is around the 9 EMA. I usually avoid it. Wait to see what happens after a decent period of time when it's around the moving averages, and then see if there's any clean setups. But this is a great example showing that a stock that's recently got beat up has the push up to the 9 EMA on the daily and then clearly gets rejected. And now looking at Microsoft, so the day prior got some big news about a big contract. So coming into Friday, was gapping up a little bit. What were the levels that looked good? Prior day's high, 239.10, and also knowing that pre-market high was 238.97. So having some technical levels that were close together is a good thing. And Microsoft is not the biggest mover, so I never give it the credit that it deserves. Majority of the time, it is tough to trade. But every now and then, especially on days where, like today, it was breaking out of a long period of consolidation, that's where the moves can be a little bit bigger. Still not as clean. It's not like a Tesla where I take a scalp and can get, $1, $2 instantly. Kind of having to realize that if it is not a Tesla, just adjusting my expectations and realizing that if I'm going to take a scalp on it, have to expect less. So if I can get 40, 50 cents a move, then I just have to take that. And off the open, this does have a nice opening range break and a clean flag pattern. It does have the break, but then instantly pulls back in. If I was in this trade, I most likely would have gotten out when it came back in, but it did set up again. So pulled back, just barely lost VWAP, would have got out just to be safe, would have tried my best to just bail on it. But then it holds VWAP, holds the 9, and then right here, this 239.10, prior day's high. So right where that candle stopped at, it gets back to it. And then when it breaks the high, I think that this is a pretty decent setup. So trying to anticipate just a little bit, getting long right around that area, and then it does have a very nice move. It moves about 70 cents in 2 minutes, which is not a huge move. But once again, knowing Microsoft is not a huge mover, when I get that 40, 50, 60 cents just in the back of my mind, knowing that that's probably a good time to take those profits, especially when scalping it. And it does have one more clean setup, so it clears prior day's high, going to show it's catching a little bit of momentum, has a nice push, pulls back to the 9 EMA, nice flag pattern, right around 240, and then trying to anticipate the break. So getting long right around that area, and then in a couple minutes goes about 40, 50 cents. Not a huge move, but once again, just knowing in the back of my mind that it is Microsoft. So once I get that 40, 50 cents, probably just good to take it. So those are some of the setups on the stocks that I didn't trade. Now let's get into the Tesla trades. Okay, so the first trade on Tesla, so it had the big gap up, showed some weakness off the open, got back above VWAP, could not hold it, and now it's starting to roll over. So even though it does have the big gap up, if it takes out low a day, it feels like it could work its way into the gap because I've seen this plenty of times before. Now, still knowing in the back of my mind that Tesla is not an easy short, so I have to be very careful. But as it gets to lows, I take 100 shares short. I got filled at 682.07, and I got the break right away, which is great because now I'm going to play defense. I do not want to let this go red. I did get a very quick move. It's easy to say I should have taken that, but wanted to give it another second just to see if it could go a little lower. And then the moment that it starts to bounce right near my entry, just to be safe because I don't want to be caught near the lows, I end up getting out of the trade for a very small win. And I'm glad that I did get out of the trade because now look at this aggressive bounce. And Tesla's approaching the high of day. Seen this plenty times before. Tesla has the dip. If there's anybody who's short, starts to reclaim VWAP, can really squeeze some people, at least just for the short term. So coming up to high of day, and I actually decide to trade options on this setup. The only downside with this setup is that it wasn't that tight. There wasn't a tight period of consolidation, which I prefer, but I still wanted to give it a chance. So I'm trading the 690 calls. I end up taking 3, anticipating the high day break. There are a lot of green candles in a row. So in my mind, I'm just making sure to be very careful. If this does not go relatively quick, I need to just get out of the trade. So I wanted to see this break 689 and then really start to speed up. 690, 691. And it's clearly showing some struggle right around that 690. And the contracts are trading right around flat. I got filled at 699. And then when it pulls back in, I end up just getting out of the trade for flat. And even though I wanted to hold this because I felt like it could go higher, I knew that all those green candles in a row, it was a little extended. It also does have the very big gap up. So sometimes that's where stuffs can happen. I wanted to be super careful. So the moment that it started to come back in, just to be safe, I wanted to get out of the trade. I can always reevaluate and get back in if it makes sense, but I don't want to get caught in holding some nasty pullback like I can be guilty of doing. So now the third trade on Tesla had that big push. It's starting to pull back. If this can hold up, this looks like a very nice flag pattern. So right around that 691. If it breaks that, it looks pretty good. I'm now trading shares again, small size, just 100 shares. As this starts to look pretty good, get some strong buying. I end up going long 100 shares right there, and I want to see this break 691 and really start to speed up. I got filled at 690.80. I did get a pretty quick move. I wanted to give it a chance, but the moment it starts to pull in right here, I end up getting out just to be safe, and I ended up losing 14 cents on that trade. So those are the trades that I took, and I ended up making $40 on the day, so flat. And I'm noticing that that's happening more often in this current market. I'm trying my best to not overtrade and give a lot of money back. So if pretty quickly off the open, I'm not able to get a lot going and I'm hanging around flat, slightly green, slightly red, I'm probably better off just walking away so I don't let a day get out of control. Because in March, I had a few nasty days that were totally avoidable. Had I just recognized that within the first hour, I was not able to get a lot going and walk away, that would not have happened. So I'm making sure moving forward that I do my best to not do that again. So speaking of March, now to get into the broker statement, here it is, top right, my name, March 1 to March 31st. And this is going to break down into 2 sections, stock and options. And funny enough, I actually lost money trading stock. I lost $5,955. Majority of that came from Tesla. And that was just a couple days of letting losers get a little out of control because that is a much bigger number than it needed to be. And then also GME having a couple days where it just did not work out and giving some back. So ended up losing almost $6,000 trading stock. And then when it comes to options, I ended up making $8,500. And to be honest, this $8,500 came within the first couple weeks of the month. So the very first couple weeks of the month, I was up nicely. And I felt really good and was very confident about having a big month. And then I swear the moment that I started to feel like this could be a $20,000 month, I just started slowly giving everything back. And it really happened within about a week and a half period. So with all that being said, at the end of the month, I ended up netting $2,545. Not a lot of money. I feel like I totally underperformed, but I guess at the end of the day, I know a lot of other traders that I've spoken to said March was pretty tough. So I'm grateful to at least be green. And it just goes to show that trading is tough and it can be very volatile. You can have a really good month. You can follow that up with a month that's not so great, have a flat month, then have a really good month. So it can be up and down a lot. But the number one thing that I'm taking from this month is to do my absolute best. I know I always talk about it, but it is not easy, especially from a scalping perspective, is to keep those losses small. I want those trades to go in my favor relatively quickly. And if they start to go against me, just get out of them. Because had I done that better, this would have easily been a $6,000 to $7,000 month. So a little disappointed with how March turned out, but I'm not going to dwell on it. I got to move on from it and then just tackle this market one day at a time. So that's it. I hope your March was all right. I appreciate you watching the video, and I'll see you in the next one.